welcome back everyone to our year-end tax planning webinar series. Today we're going to be talking about our top topics and strategies for year-end planning for business entities and individuals. I'm joined with Zach Kanady. Zach, if you don't mind, can you introduce yourself and tell a little bit about what you do?
Yeah, like you said, I'm Zach Kanady. I'm a supervisor here in our dealership department. I work on reviews, audits, not a lot of audits, mostly tax, and then I also work on some transaction work, helping our clients buy or sell businesses.
I see. Let's start super easy for year-end tax planning, business individual. Let's start with just like the inflation adjustments to rates, maybe standard deduction, tax brackets, things like that. Did those change? How did they change?
Yeah, most of them changed with like a standard inflation percentage of about 7%. So like your first tax bracket, if your first $10,000 were taxed at 10%, now your first $10,700 are at 10%, and then you move into the next tax bracket. So that is small benefit for the taxpayer. The standard deduction increased by about 7%. Now it's $13,850 for single individuals, and it'll be double that for married filing jointly. And then the only other thing is self-employment tax went up. Well, there's a few other things, but the main thing is the self-employment tax limits went up, and they went up by more than 7%. Now it tops out at $160,000, so you'll pay that full 15.3% on the $160,000.
So for individuals, maybe if you were on the cusp on standard deduction, you might want to revisit that. And then those self-employed individuals that are looking at estimated payments, you might need to be looking at your projections for the following year because the self-employment tax could have bumped up because the cap got a lot larger.
Absolutely.
Let's shift gears a little bit. On the itemized deductions, specifically for state and local tax, that with the new tax code back in 2018 was capped at $10,000. I think last year some of the states came out with a pass-through entity deduction or a way to kind of get around the SALT cap. Has that changed at all year over year? Are there anything else people should be considering with that this year?
Yeah, so just a quick rundown on what those elections look like.
Okay.
So for most individuals, the income from the business flows up to their personal return, and then they pay the state tax at the personal level. And like you said, they can only deduct $10,000 of that right now. But now all these states are giving them the election of paying that tax at the entity level, and then you reduce the flow-through income up to the individual so that you effectively get to take all the tax as a deduction for your federal income. And there's been change. All the states are different. They all do it different. Some exclude income. Some you get a credit for the tax that you paid. It really just depends. Some have been doing it since like 2020. Like Louisiana was one of the first states to do it. But some of the biggest changes are just which shareholders are eligible to do that. And to figure that out, either talk to your CPA, go on the state website. There's a lot of resources for that.
Seems like a very case-by-case, can be pretty complex.
Oh, yeah. Case by case. It's individual by individual, business by business. Certain people who own a lot of businesses, it makes sense for some and not the others. It just really depends.
I gotcha. Okay, it feels like there's been a lot of legislation with the Secure Act and maybe Inflation Reduction Act over the past few months. Let's kind of hone in on some of these green energy tax credits, specifically for vehicles and EVs. How are those, and what are some maybe high-level general guidelines for businesses first, and then maybe the individual impact of those?
So very high level, to get EV credits, it just got a lot harder. And so there's like a two-pronged test, and in those tests there's steps of the criteria that you have to meet. And just like high level, the first one is more like it really depends what part of the state you're in, what part of the city. There's actually maps you can find online that show you, whether your business even qualifies. If it's in the wrong part of town, it's pretty much game over. You don't qualify. And so we think like 95% of like our dealership clients who have a lot of, typically have a lot of EV credits because they have to install the charging equipment in order to sell the EVs and to service the EVs. A lot of them will not qualify anymore. And then also, the dealerships are having to register the cars with the IRS. And so in order for, like you and me to get the credit if we wanted to purchase an EV. And certain cars aren't even available to register. Like a lot of Toyotas aren't. And so that $7,500 credit that usually you would get when you buy the vehicle, certain vehicles, it might not be allowed anymore. So.
Is there like a general place people can maybe look up on the individual side, cars that might qualify?
I don't I'm sure there is.
Yeah.
We have a lot of resources.
Okay.
I know that we focused a lot on the business side. We may even have a resource out on our website for the
Gotcha.
individual side of that. But
Yeah.
there's two resources out on our website that I
Okay.
know you can go look at and get more details on that.
Gotcha. Awesome. Let's kind of transition into depreciation. A lot of people maybe around year end are thinking about spending on some maybe equipment and different things to get tax deductions. How has bonus depreciation changed? And is there any maybe state changes that have happened?
Yeah. So since the Trump tax law came into effect, we've had 100% bonus, and it's going to phase out by 2026. So this year, 2023, it's 80%. So you used to be able to buy that $30,000 piece of equipment and deduct the entire cost that first year. Now you're only going to get 80% of it. One thing to note is you will also get, on top of that, the regular depreciation in the same year that you take the 80%. So if it's a $100,000 piece of equipment, you get your $80,000 bonus depreciation, and then you're going to get, if it's a 5-year asset, 20% of the $20,000 remaining. So you can still get, $85,000, which is still pretty close to that 100%. Some other changes: Tennessee now conforms with bonus depreciation, and because of that 80% change, Section 179 is really going to come into play.
Gotcha.
In the past, many clients, it was just easier to take bonus, but now, because they were both 100% deductions, but now Section 179 will be really important.
Keep your eye on. Okay, when talking about retirement contributions, I know this Secure Act 2.0 kind of really came out with an overhaul of a lot of our contribution limits and maybe some rules for retirement plans. A lot of those do look like they're going to come into play later, maybe 2025, 2026. Is there anything for the 2023 tax year, maybe be on lookout in 2024, that people should be aware of?
Yeah, the required minimum distribution age changed from 73, or it is 73 now, and it will be 75.
Okay.
I don't know what it was before, but it's now 73. Yeah. And then the penalty for not taking your required minimum distribution is 25%, and it used to be 50%. And if you don't take that distribution and you voluntarily, sort of own up to it, they say the penalty is only 10%.
Gotcha.
And I've actually heard good stories of that working out as they say it would.
Yeah,
so,
what I've heard is if you can show some good faith
that's right.
and do it and not try to prolong it and just kind of get it paid in, they'll sometimes
Yep.
drop it to the 10.
Yep.
Last thing, let's just hit on, when you're having conversations with clients at year end, what are some of your top items that they should be looking through, maybe like a year end checklist to help reduce their tax liability?
Yeah, so this is sort of, I'm going to start with preventing penalties and interest. For this Q4 estimate, you need to be looking at safe harbor. You have to either pay 90% of current year tax by January 15th or 110% of last year's tax to avoid penalties and interest. And so that's something you're going to really want to be evaluating. If you made a lot more money, then it's really easy. You just pay 110% of last year's tax. But if you're looking a little lower, right at last year's, you may not want to pay the full 110, and then estimating that 90% becomes really important. Some other things to look at are PTE elections, like we discussed earlier. That can be huge, but also it can be done wrong, and you can end up in a spot where it was not beneficial. So that's something you want to look at. Purchases, we talked about bonus depreciation. If you have equipment or some other capital expenditure that is important for your business that you were looking for in January, February, March, you may want to pull it in to 2023. But don't get caught in that trap of you spend $100,000 to save $30,000. That's not a good deal. Nobody ever wants to do that. But if it's something that you really need and you were going to buy anyways, you might want to pull it back.
Awesome. Well, thank you so much for coming on. I feel like that was a good summary. Thank you, everybody, for joining. If there's anything maybe we said that you want more information about, like we mentioned with some of the EV credits, we do have a lot of information on our website. If you go to hhmcpas.com, you can look under our resources. There's also a place on there to contact us. If anything, maybe you brought up some questions you want to discuss with your CPA or want to discuss with us, feel free to reach out. Thank you for watching, and we hope to see you.